I just toured a 16-unit apartment building that's been sitting on the market for nearly 3 years. In that time, it's been through 5 different brokerage companies, and the asking price has been dropped by about $2 million. Still no sale. So let's break down why and what owners and buyers can learn from it, because this story isn't just about one building, it's a snapshot of what's happening across the Los Angeles multifamily market. Here's the thing. The previous brokers were using what I call the post and pray strategy. They'd throw it online, wait for calls, and hope to double end the deal. The problem? They didn't make the rent roll or P&L available on CoStar, which meant serious buyers couldn't evaluate the property. Without transparency, the building just sat, and after 5 brokerage attempts, it's still sitting. The building itself isn't the issue, the strategy is. From the street, it doesn't show well. Air conditioners are installed all over, some in windows, some through walls. Balconies are cluttered with personal property. Large trucks make parking tight. And the listing photos? They almost look like renderings, not real-life images, giving buyers unrealistic expectations. But the bigger problem is pricing. It's above what the market supports, which is why it's lingered. To put that in perspective, let's look at what's really happening in the area. Similar buildings nearby, same vintage, similar unit mix, are selling for less per unit and at stronger cap rates. Buyers are comparing numbers, not emotions. When they see this one priced above those comps, they simply move on. And every time a listing sits, it sends a signal to the market. Something's wrong. So owners start asking, if the building's good, the area is solid, and interest rates are stabilizing, why hasn't it moved? It comes down to a simple mismatch. Owners remember yesterday's values, buyers are focused on today's math. Owners think someone will eventually pay what it's worth. Buyers think not with those expenses and rent restrictions. The gap between the two is what keeps listings like this one stuck in limbo. And that's where market strategy, not just marketing, makes all the difference. Properties are selling right now, but the ones that move have 3 things in common: transparent financials, rent roll, P&L, and expenses ready to go, realistic pricing based on current cap rates and the cost of capital, professional presentation that matches what buyers actually see on site. The listings that miss one of those 3 sit. And I see it every week because I'm out there walking these properties. I know this inventory. I'm in these buildings talking to owners, reviewing what's trading and what's not. So for owners, here's the takeaway. Price realistically and show your numbers. Transparency builds trust. For buyers, look for these long-sitting listings. That's where the leverage and the opportunity often are. But there's one more factor that's shaping all of this, and it's not interest rates. City policies have made it harder for multifamily owners to operate freely. Rent increase restrictions, extended tenant protections, and rising compliance costs are eating into margins. Long-term owners are tired, and new investors are cautious. That's why realistic pricing and solid management now matters more than ever. The irony is these pressures also create openings. Buyers who understand regulation can find value, and sellers who adapt can finally unlock their equity, because at the end of the day, strategy and transparency sell properties, not wishful thinking. That's what separates the listings that linger from the ones that close.